Hello everybody, this is Evan Carthy from evancarthy.com. Today we're going to look at the weekly outlook for the week of March 11th for the S&P 500. Starting off looking at the daily chart right here, price has been going up ever since this downtrend bounced off of the 200% Fibonacci extension level. It's been going up ever since. Then this week it's been pretty much nothing but a downward move. Closed up as a hammer right here, but I don't put too much stock into candlestick patterns. But interesting nonetheless when you have a big wick on it. That is something to take note of. And the pink lines are going to be the exit levels for lightning trades to the short side. That still need to get hit, so we're looking for price to probably continue down further. I thought Friday there'd be a good chance for it to hit around and take this one out, 27.11. Got a little bit close around to 27.27, but then price probably back up to finish close to where it opened to. So you still have this one down here you need to hit from this last move that's been going up. But what's been starting happening up here on the smaller time frames is lightning trades to the long side for buying have started forming as well, and that's typically what you see when you start having a trend going one way, because as you can see when this one happened, it started going up, it started forming lightning trades to the short side and everyone filled. Earlier this week when these three down moves happened, or the weekly down moves happened, a bunch of lightning trades got filled up here that were to the short side that hadn't got filled yet. So we'll go into the hourly chart right here, move it a little bit closer into it. Here are two lightning trades that happened that got created. I'll show you how they got formed. Use that pivot point right there, this one right there. See price broke out of it, came down, never hit the 100% Fibonacci level, came down, hit the 0, never came back up and hit the 50% Fibonacci retracement level, but it's been bouncing up ever since. It made some support up there, and let's see if that's a level bounce. So yeah, it bounced off the 1.618 Fibonacci extension level, and it's been bouncing up ever since. So from that move, what we're looking at the exit to eventually get filled right here, this 50%, which is at, so I move this down just a tad, get that accurate. 27.88 is we're looking for that one to get filled for that move. Then you have a little bit of a bigger move right here, not a big deal, it happens. Is you have price perfectly using that pivot point and that pivot point up here, price perfectly bounced off of the 0% Fibonacci level on Friday and has been going over since. So the exit we're looking for this one is going to be the blue line right there around 27.70. So it looks like there is a little bit of it created definitely some support right there. So it needs to get through the 38% level first, which is at 27.61, obviously before it goes up and hits the blue level right there. So it'll be interesting to see what happens right here when it hits this level, because there is another trade setup that I've started using. I just discovered this past week. It's more of a continuation trade setup. It is similar to the lightning trade, but as the lightning trade, as you can see right here, what we look for the lightning trade is we look for the breakup going up to the 127 Fibonacci extension level, but when that doesn't get hit and it starts retracing, it's at 38, we move the target up to the 100. If that never gets hit and it goes all the way back down to the 0 for the lightning trade, then we move the target to the 50% Fibonacci level, and that would get you out of there. So that's how the lightning trade works. Now this other trade, we don't have a name for it, just call them the 38 to the 127. This is more so of a continuation momentum play right here. So what you do is I try to look for a couple swings into it. So you have a swing right there, you have little one right there, not that big one, but then there's one forming right here. And how I try to identify a valid swing is just if price, if you're using the top pivot point up here, comes down, and then when the retracement comes up and hits at least the 38% level. So that's how I tend to view. That's how I view the retracement and it being a valid swing. I try to make sure at least hits the 38% retracement level. So at least we have one valid swing. Now I like to have more than one, so two or more is what I'm looking for to ensure that it's in somewhat of a trend. So here we have it. Price is going up And so what we're looking for right now is it to hit that 38% retracement level at 2762. Once that happens, if I was going to trade this, I'm not. I don't trade the S&P 500 right now. But if I was going to do it, what I would be waiting for is that right there. So I'd be waiting for price to come back up and hit the 38% level right here, which is at 2762, and then my first exit would be the 127 Fibonacci extension level. That would be 2701. That would be the exit I was looking for. Now, if price doesn't go down and hit the Fibonacci extension level and keeps going up and up and up and up, you can get in again. You can get in at the 50. You can also add on at the 61 because your exit is still not changing. It's still going to be the 127 Fibonacci extension level. And yes, plenty of times price comes up, hit 38, keeps going up, hits the 50, keeps going up, hits 61, but then that's going to be the linchpin, and then it goes down and hits the 127 to complete the move for it. But if price continues to go up and it isn't going to be a continuation momentum play for it, then what you have to do is you have to get in. If you've entered in at one of these levels, at 38, 50, or 61, then you have to get in right here at the 0% Fibonacci level at 2820, because what that is going to do is it's going to move your exit all the way up from the 127 up to the 61.8 level, which would be 2784. So depending on how many contracts you get in, let's say you just got in one contract at the 38% level, then you can just get in with one contract at the 0% level, have your exit at the 61.8. I'd have it just slightly above it just to ensure you get out of it. And that will ensure when the price does come back and retrace and hit the 61% level, you'll have a slight profit. Now you can get in with more contracts to get a little bigger profit, but that's going to be kind of your worst case scenario as far as your profit potential, just doing 1 and 1 if you want to do that. If price continues to go up against you, then you can get in any other time you want, because the hard exit is not going to move right here from the 61.8. You can, of course, get out earlier than that if you have some profits you want locked in. No big deal at all. But that is how that one works. And so been using that in my Forex trades. Really like it. Just spotted it last week doing the same thing I did, come up with my other setups just through the meditation that I have listed on my website about how to get in and do it. It's recommend everyone do it so you don't have to follow trading rooms or paying for signals or that kind of stuff. You have your own setups that you trust and know, and yeah. So that's that from the hourly chart. It depends on what this uptrend is going to do. I think there's more. Let's go back to the daily chart real quick. I think there's more move to the downside right here. I just think it's popping up real quick, trap some people, and it's going to go all the way back down. Now, we do eventually expect this to come up and get filled. That was one of the targets I've been talking about for a couple weeks now, that this one's going to go up and get filled. But if you take a look at this, using that swing and that swing all the way down here, 38% is all the way down here. Now, for a healthy uptrend, you having a 38% retracement level is perfectly fine. I mean, that's no problem at all. So if price does continue to go down, it's obviously going to take out that level. It's probably going to come down and take out that lightning trade setup as well. So then all the shorts that need to get filled are taken out. Now that doesn't mean price couldn't continue to move down. Definitely could. But if it does come down, and that's the pivot point top, it comes down and hit that, then I definitely think about looking at getting in. Because one of the things I've been pointing out as well is look at the MFI down here. The MFI have been going down as price have been going up. So I said in video for I think about the past 2 weeks, I said look for a retracement. It's going to happen sooner than later, just because when you have the MFI, which I don't trade strictly off of, it's just a guide to kind of show me what price is doing in relative to how the money's flowing into the market. It's been going down less and less. Market's been going up. So I said that there's eventually going to be a retracement up here. I thought it would hit this one first up here at 28.49 before the retracement happened, but it seems to start a little bit sooner. But as you can see, it's over halfway down. It's clearly out of the range of being overbought. It's almost halfway down to the oversold level. So if it does start getting down close to that level, depending on prices, then I would start getting very interested in looking at going to the long side. So in a perfect world, what I'd like to see to happen is price to continue to go down some. To be honest, I wouldn't mind it going down all the way down here to 26, 26. That would be the 38% level, and also take out that short, so we don't have to worry about coming that and filling up. And then that for the MFI would more than likely put that down here in the oversold area, and then look for a very strong continuation buy, and we'd be looking at the exit all the way up here at 29.57 if that happens that way. But one of the reasons why you're having all these setups is because when price went, and see, we can see here, when price came, well, it hit up there perfectly, but when price went and made this double top, it made a slightly higher double top. So what that's going to do is create a bunch of entries for lightning trade setups to the long side the further price goes down without having a major retracement. Now, if we had this kind of double top right here, but it was lower than this one, we wouldn't have all these setups that are getting formed that are getting formed right here. But if we go down to even closer time frame, real quickly, going down to the 15-minute time chart, we can see how that 38 to 127 trade I talked about is working, because move this down a little bit. One of the issues I have with lightning trade is when you would have like this and there's never kind of another break lower, it was really hard to get in, so you missed a lot of moves. But as you see from this one right here, so there's a swing right there, there's a couple swings in there, and then you have a swing right there. So this is a valid 38 to 127 trade. Came up, hit the 38% line. You see it perfectly waffle around between the 61%, 30%, and then finally breaks out, and then it hits perfectly down at the 27.53 level. And then can't really use this one up here anymore. There's not too many swings, so we could bring it back down to right here to that swing level. Either use that one or that one, but either way, it came down, hit perfectly, finished out that move right there before it started moving back up. And within it, I wish I had left on the chart. Right here is either right here, I believe, was another lightning trade move that got filled last week. Yeah, it was this one right here. You can see it. Watch this red line right here. Watch how price just bounces off it perfectly. Look at that. That was the end of a day right there. I think Thursday it was. Bounced off right there perfectly to fill that lightning trade setup to the short side. So for whatever reason why now, price has been moving up. Like I said, I expect it. I think what I like to see is price continue its retracement down some more, based upon the setups we had spoken about. There's 38 127 trade right there. So what I like to see in a perfect world, on Monday, price continued to go up. As you see, the volume, it hasn't. This one another thing I started adding to my chart is looking at kind of volume, especially on the smaller time frames. Volume is decent, nothing great, kind of average compared to these other days over here. Like over here, you had a huge volume down day right here. So one thing I was looking for is if there is going to be like a recovery for it, what you want to see right here is when it does this huge V pattern right here. You want to see a huge volume day for it, and we really don't have that. I mean, look at this day, it's about the same as that one. That one has even more, that one has a little bit more than it. So it's about average volume, not huge volume, so it doesn't look like there's huge money getting poured into it right now to keep this going. So that's why I definitely want to look at these levels right here, the 38. If it hits that, then I will be looking at going down towards 2700, being that exit level, and also take out that lightning trade. So that's what I think is going to happen in the S&P 500 coming up for the next week or so. I think there's definitely more room for the downside, but there will be some retracement moving back up to the upside. So just be careful. Don't get trapped in any moves that are moving up to the upside, because I think there's a lot more potential for more downside action to happen. But then, like I said, once price comes down and hits, go back to the daily chart real quick. Once price comes back, if it does actually go back to that level and hit the 38% level right there, then it becomes extremely interesting about going long. And here you can see the overall volume still nothing great. Actually, that's not a lot of volume at all down here. So not a whole lot of volume. So I don't expect the uptrend like this to continue up and make this, you know, a bigger move higher. I'd like to see it come down down here, and that would create some really good buying opportunities. So I hope that helped. If you want to see anything else, just let me know, and have a good week. Thanks. Bye.